Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago home office here, entering the second half of November, which is somewhat disturbing and getting awfully stinking close to Turkey Day, which is also another wild one. Joining me today from Wichita, Kansas, Director of Feed Foundations, Mr. Jake Kingsley, and from Madison, Wisconsin, Dairy Market Advising Director, Miss Katie Burgess. Team, how are we today?
Doing pretty good. How are you?
I'm doing very well, thank you. Katie, how are you?
Also doing good. Looking forward to Thanksgiving.
Yes, it's happening. It's a week from tomorrow.
Exactly. And then Christmas is not that far away, so we're getting to that time of year.
What's
I've
up with
already
that?
started my Christmas shopping. First time in my life.
You have started?
Yeah.
What's wrong with you?
I don't know. I'm telling you, first time ever.
Do you have enough work to do?
Yes. Yes, I do.
Okay. All right. Just checking. Good answer. But Katie, you haven't started because you've been so busy servicing our dairy farmers that there's no way you've gotten a jump on shopping.
Oh, there is zero chance that.
Yeah, for sure.
Not in my near-term future.
And your husband, just like my wife, are very understanding of that. Like, sorry, work out in the way. No presents.
That's why they have same-day delivery now. So we'll worry about that December 20th.
We'll get there later. Very good. Well, we do have a lot to chat about. So I guess, Katie, last week we were at ADPI in Chicago, the event hosted by ADPI and the CME Group. You presented, I presented, seemed to be a really nice crowd, really good conversations, really good information. I think one of the things that happened during that seminar was that the government reopened. We ultimately received we were going to receive these anyway, but we got a milk production report earlier in that week. We got a WASDE report later last week. We're going to talk about that WASDE report with Jake here today. But I think the big part here is that more government data coming online, how it's going to impact these markets. So, Katie, that should be really interesting. And we're going to touch base with you on that here in a moment. But first, Michael, if you would please kindly timestamp the broadcast because it is Wednesday morning. It's about 11:40 a.m. Chicago time. And by the time you all view this, it'll be 1 week from Thanksgiving, which is wild. The markets are a bit red here today, and volatility has remained a part of the game. That is for sure. But today is the down day, at least for the moment. We look at December corn is currently down 7 cents. It's just right at 4.30 at the moment. We have Dece wheat just under 5.38 at down, let's say, about 9 cents in Chicago. We have Jan beans down 15, and we have December meal, that stubborn little byproduct, is down 6.70 at 320.30. So again, a down day for grain and feed, and we'll chat with Jake through on what's impacting those numbers. But Katie Burgess, how are things looking here in the dairy markets this morning?
The dairy markets are similarly red, like the grain markets are today. We had spot butter fall to 148. Cheese remains under pressure as well. And even when we look at the non-fat dry milk market, yesterday we were up at the highest level we had been in a few months. Today we lost a little ground. But I think one of the main themes in these dairy markets has been, even when spot cheese ran a few weeks ago, when spot non-fat ran here this past week, the 2026 futures have generally been trading steady to lower. That there's still a lot of pessimism out there around what prices might look like in 2026. And we see that playing out with more red days than green days here as of late.
Yeah, certainly. And I guess as the government data does come back online, Katie, and, I guess at this point, perhaps last week's milk production report could be considered old news for some, but we are going to then get another report. I mean, those reports, is it safe to say, are trending bearish as well? They're having that negative impact on the markets.
Yeah, I would say, clearly bearish as we looked at last week's milk production report. I think this week's milk production report likely shows more of the same. And so as we look at it, really the thing that's weighing on markets the most is that the dairy cow herd is up to the highest level since 1993. And when you look at the year-over-year surplus in cows, it's the biggest surplus since the 1950s. So as we're heading into 2026, we're doing it with a lot of cow power. That there are a lot of dairies that have expanded. And I will say that as I've been out on the road, there are also still dairies going through the process of some that have mostly expanded, but are still planning to buy a few more cows. We've got others that aren't even online quite yet. And so as we think about 2026 and having more milk, it seems like we're still kind of down the road of adding cows and seeing expansion, especially in the areas with increased plant capacity over the past year or so. But it feels like we have plenty of supply here in the US. Also, add to that, lots of supply in Europe as well right now. New Zealand is having a strong season. So I think from the data, we know that we have a lot of milk heading into next year. Demand remains a question. And so because of that, that's why we see so much pressure in the dairy markets.
Okay. And Katie, you just mentioned demand there. As we enter the holidays, which we're already there, have the large commercial buyers already at this point, a week ahead of Thanksgiving, are they pretty much bought up already at this point on the products that they need to fill up the grocery stores for the holidays here? I mean, we're 1 week from Thanksgiving, then we're going to be 5-ish weeks or so as well from Christmas, add another for New Year's. I mean, this is the heat of it. Throw in the Super Bowl then a month or so later. What are we looking like from that buying standpoint?
Yeah, a lot of it has already been spoken for. I mean, you're going to have a couple more perishable items, like there'll be more eggnog, more heavy whipping cream, all those kinds of things that'll come in December. There'll also be a restocking period. So especially in the butter market, we'll see how the demand looks here for Thanksgiving. If a lot of butter moves off the shelves, maybe people have to re-up their orders as well for Christmas. We'll see how it goes, but we're watching the butter market really carefully because, like I mentioned, we're at the lowest prices in a handful of years. And so given that, it does set the stage for increased butter promotions here heading into the holidays. I know a fun game we play internally is, what is butter on sale for at your local store? I think we've seen a lot of $2.99, maybe some $2.49s if you can find the best deal. But then there becomes this question of, well, great, butter was on sale. I bought a few packs. What happens to my demand come January? So some big questions out there as we think about holiday demand, what it looks like to see, are consumers going to step up and eat more dairy products this holiday season? Or, I mean, all year demand has been lackluster. So is it more of the same?
Gotcha. Okay. And Katie, before we jump to Jake, because we'll be focusing on that USDA data, any indication that this milk production growth would slow down in the upcoming milk production report?
I think in the upcoming reports, especially because we're comparing against bird flu in California during the fourth quarter of last year, the numbers are going to be very easy to beat, which is going to kick out big numbers. As we look at our milk production model, it's hard to say what's going to happen. A lot of the cow numbers is based on high cattle prices. So folks are keeping these older cows around so they can have these high value dairy beef cross calves. We don't really have a good analog year to figure out how this is going to play out. As we run different scenarios modeling 2026 milk production, the most likely scenario is that the growth rate starts to slow as we make our way into the second quarter of next year, and maybe slower growth or even some contraction in the back half of next year. But at this point, that's still pretty far away.
That is still pretty far away. So yeah, we'll be focusing on the near term at the moment, but certainly some opportunities though, then Katie, to work with our dairy farmers and help protect some of that risk that we do have into the second half of next year. So thank you very much, Katie, for your insights. Jake, sticking with the theme of maybe some bearish seeming USDA reports. We did finally get that big WASDE report on Friday. We were going to receive that report regardless of the government reopening last week, which I believe was Wednesday night that they ultimately agreed to do that. And then we got the WASDE on Friday, and should have some consistent data starting to flow in going forward. So, Jake, I said seemingly bearish, and I'm going to refer to the corn market specifically there. What were your thoughts on that WASDE report in terms of the corn market?
Yeah, I think it's pretty interesting market response to these numbers, right? We had yield cut by about 0.7 of a bushel. I think we added 100 million bushels to the export line on corn, and yet we came in at a higher ending stocks number, still at 2.1 and some change, 2.1 billion bushels and change there, because we had a higher beginning stocks number for this new crop year, based on the change in quarterly stocks, bringing in more corn from the previous crop year. So very healthy number there at 2.1 billion bushels. You would expect this market to soften up a little bit, and yet we kind of hang out here at the higher end of this range that we've traded over the last 2 months. And I think largely that's due to just a little bit of following along with beans and protein, right? Which, again, wasn't a super bullish report coming from soybeans either. We reduced yield by 0.5 bushel. That ending stocks number did come in at 290 million bushels there, which anytime you get under 300 million does feel pretty thin, starts to be a little bit of a bullish number, but they didn't do anything to exports. And the other piece of data that we got on Friday, simultaneous to the release of the WASDE, was all of this backlogged export information in which China had bought next to nothing from us. Our overall exports on beans were still relatively lean. And again, you go back to the trade agreement, the discussion, handshake deal, again, nothing signed, but the discussion between US and Chinese negotiators was that China would buy 12 million metric tons of beans for this crop year. So far, as of this week, they've bought something close to 2 of those 12 million metric tons. And at the end of the day, 12 is still less than half of what they typically get from us. So you have to expect some sort of an adjustment to that demand line on the bean balance sheet at some point to really help bolster up the ending stocks number. And so for this market to continue to trade around here in the high end of these ranges that we've really created over the last 30, 45 days is interesting. It feels like it's a lot of managed money and funds flowing into this. Maybe it's a little bit of a hedge against economic concerns and some cash coming out of the stock market. It feels like that's been weakened over the last few weeks here. So hard to say for sure. We'll continue to get more data. We'll hopefully later this week or early next week get a new commitment of traders report to kind of show us where that managed money is sitting. But by and large, the data tells us that there's plenty of grain out there. And oh, by the way, South America is cruising right along through their planting window. They've had pretty ideal conditions, and they remain on pace or a little bit ahead of their normal planting cadence. So it's hard to see how this thing remains sustained up at these levels for too long. For now, we've got folks repositioning and trying to take advantage of the market while it's here to cheapen up some feed, or if they are still exposed on quite a bit of feed through next September, putting a little bit of inexpensive catastrophe insurance in place, but not panicked at this point by any means.
Yeah, and I think, Jake, especially as we compare the corn market versus the soybean market, even as we record, corn has actually dipped down to 8 cents lower. So we're closer to $4.28 type of price at the moment. So clearly a decent amount of steam coming out of the corn market as we record here. I think March is now kind of, I'd say coming down to test, this 440 support level for the March contract. D's corn trying to get under that 430 support level. So very notable movement here as we record. There was a sense of this let's say 3 trading sessions ago, right? We went into Friday after that WASDE report. That WASDE report really beat up this corn market, and corn had been really starting to creep higher. I was sweating it a little bit on that Thursday afternoon after ADPI, when I essentially told everyone at ADPI that if they could read between the lines, that I was pretty bearish on corn. And as I was talking, we were rallying. So another reason to keep my mouth shut out of many. But the Friday report, though, that really hammered this market. And yes, we did manage to bounce up a little bit Monday, Tuesday. But again, as we record today, with a good hour and a half left in the session, we are down a pretty decent chunk. It looks like managed money would think is pulling back, some of this strength out. And Jake, you noted some of that managed money conversation. We bring up the macro element just because we need to try and figure out what managed money wants to do with this market, because we know at the end of the day, it feels like funds don't want to drive this corn market all that much higher. But there's also an element they can't help themselves if they're going to be driving into beans based off of this potential trade anxiety with China. But as we look at the macro, I mean, the Fed funds target, we're going to find out in December what that next cut or not cut looks like. But currently, the odds of a cut, according to Fed funds futures, have dropped down to like 36% chance of a rate cut in December. A month ago, we were at a 94% chance of that for a rate cut in December. So the macro picture has shifted, I would say, dramatically over the last 2 to 3 weeks in terms of what the market expects the Fed to do. And then, of course, what does managed money do? It certainly felt like they were buying into this idea that China would, A, fulfill that 12 million tons, and then potentially go into the next 2 marketing years and fulfill 25 million on each. But even after that WASDE report, the markets closed on Friday, and President Trump and Secretary Bessent both came out and said, well, maybe we won't hold them to those 12 million tons for this year. Maybe it's more of a marketing year requirement we might hold them to, right? And I think that's the frustrating part for those of us participating in the grain and oilseed side of it, is that there's just a lot of mights and a lot of maybes. There's nothing actually cemented here or written in stone. So even though the government is open, we will have reports coming out to impact this data. It still remains unclear what is actually going to happen in terms of soybean sales, specifically to that Chinese market. And I think where beans go, meal goes, at least at the moment. So we're going to see how that impacts our dairies. But Jake, you noted, most folks that we've been chatting with that at least bought some protein, if not all, from Oct through March, maybe even further. And you noted when you get a elevated market like this, that's difficult for us to really explain from a supply and demand side. We're going to take advantage of that and, find a way to capture some of that equity that has been built into this meal market, at least at the board. So there's a lot to chat about lately, especially as we do go into the holidays. So that being said, Katie, next week, Thanksgiving, favorite dish, Thanksgiving meal. What's your favorite dish?
Definitely cranberries.
Definitely. Wow. Good for you. I feel like I don't get that answer a lot. Cranberries.
Special family recipe.
Oh, see, that's the trick. See, that's real nice. Jake, what about you, bud?
Man, I like the stuffing with a little gravy on top.
Oh, yeah. Now you're talking. See, that's what the doctor says don't do that. That's what I like.
Doctor.
Yeah. Yeah. See, yeah, that's the easy solve is not to see your doctor. That's the easy solve. Enjoy Thanksgiving. Don't make a medical case out of it. Yeah, just enjoy yourself. Big fan of the dessert. Obviously we can all jump to that part. I think both of your ingredients that you guys just brought up are also key for me. Those sound absolutely delicious. So very thankful for you both. Thank you for being here today. We'd also like to thank Michael and the Everag Insights crew for their support. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.